The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. If you happen to miss an episode, you can catch me on Apple or Spotify. That's the Main Street Code for Financial Success. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors, insurance advisors, attorneys, CPAs, with insurance questions and planning, and that's what we do best. One of the things I wanted to talk about today is a group that I formed called the LIAFPN. I founded an organization which is really a think tank, and it's a think tank for financial professionals. And we started this, and we have like 35 members, and part of my think tank are every other financial professional besides the insurance expert. Like we have attorneys, estate attorneys, CPAs. It's designed to help CPAs, and everyone has their own area of expertise, which makes it quite a great thing, so that when we're trying to help a client or a person or a business, we want to have the best advice for that person. And everything's custom and tailored to you and what your needs are. So if you need a will, or you need this, or you need that, but you need a certain thing, that's why I started it. And the interaction, and we meet, we have educational meetings once a month where we interchange ideas and discuss situations. And we have, networking events, but it's more thought-provoking and introducing and making sure that we're cutting edge and know the latest and the greatest of everything to take advantage of, whether it be tax laws for your benefit, or whether it be things. And, out of that comes business, but more importantly, gives you the best service. So, many times I talk about having your own financial team, and part of that is me helping you put your team together. And unfortunately or fortunately, many areas of financial planning, when we talk about financial planners, they think, you're going to a financial planner, and you may be just going to an investment professional. And I can give you a million examples of that. But, a lot of people that call themselves financial planners are just looking to manage your money, for instance, or manage a portfolio. But they don't look at the whole picture. They don't look at your insurance. They don't look at your taxes. They don't look at your legal thing. They don't ask about your will. They may ask, about your risk tolerance and this and that. And that's not the complete financial planning job that needs to be done for anybody. So I am the, co-founder of this organization. And when it comes to insurance, we have people that call me and ask me for advice. So I had a call yesterday. He was from an RIA. He was from the city. He was recommended I speak to me. He says, my client unfortunately just lost her husband. She's 51 years old, and she's a teacher. She lives in Manhattan. she has 2 kids receiving financial aid for their high schools and is concerned because he died and he left her $300,000 life insurance policy, which is not uncommon. But, what's the best advice so she continue to have the kids on financial aid? Now, this is an RIA who's been in business 20 years and he thinks he knows everything. He says, I spoke to a lawyer and this is what they said to do. I spoke to someone else. I said, but you didn't speak to me. Because speaking to me, I would give much different advice. When you're applying for college and you're worried about the assets being in your name, one of the things that you can do, or there's multiple things, is you can put your money into life insurance and or annuities or your retirement plan. And all of those things, life insurance, annuities, and retirement plans, are excludable assets on a FOSA form. And if you don't know what a FOSA form is, then you haven't gone to college, high school in a while, or don't have a kid, going to college. But when you fill out a college form for financial aid, for grants and everything else, they want to know what your children's assets are, and they want to know what your assets are to determine whether you need that financial aid or not. If all of a sudden you're showing a lot of money, then they say you don't need the aid. But if you can shelter your money in a positive way for your benefit, life insurance, annuities, and your retirement plan, whether it's IRA or 401k, are all excludable, or 457 or 403b, all excludable assets. So very easily she could continue, but this isn't the only money she had, and this isn't the only consideration. She also had, I go, does she have any life insurance? Well, he said she has $700,000 of coverage. I go, what kind of coverage? I was, I don't know. She's got some through work, she's got some through here. But to me, I get into the weeds. I'm going to go into the details, because if it's through work and she's thinking of retiring in the next 2 years, well, then it's gone. Then she has no life insurance. If it's a term policy, is it going to expire next year? And she has some real concerns because she's got an 18 and a 17. Her husband is no longer, contributing to the family income. If she retires early, is she going to have enough income to live until she can get her pension? So maybe you don't use all of the $300,000, maybe use $200,000. Maybe she needs money here, you need money there. You do need protection, because even though the kid gets into college and everything else, you don't want to leave a 23-year-old or a 22-year-old, okay, got my degree, but no money coming in and no insurance on the remaining caregiver. Then you're putting your kids at a big disadvantage. So life insurance is a big, big deal to not only protect you if you need it, but also for the kids. But in addition, it's a great cash accumulating product where you can take out the money later, tax-free, tax-deferred, no taxes. The annuity is a little different. You have to pay taxes on the gains, and if you take it out before 59.5, you could have a 10% penalty. However, there are regulations which the registered investment advisor had no idea, and I don't want to get technical, but there's something called Regulation 72T, where if you take out a stream of income over 10 years and more, you cannot have that 10% penalty prior to age 59.5. But most people don't know that, because all they're looking to do is manage this woman's $300,000. So that's the issue, and that's why people come to Main Street Planning Group, call Neil, and Neil will help you, set you up, and put on a complete program. I'm not saying, investments are bad or good or indifferent, but there's all types of investments. But a lot of things, it's not just about asset allocation, it's tax allocation. It's, do I want to be taxed now? Do I want to be taxed later? Do I want to be taxed never? Never is, I think, is the best. Okay? Life insurance can give you that. So you can create your own pension or your own income stream down the road that you can take out tax-free, and if something happens to you, you have a tax free death benefit. So that was an interesting call. And then in my group, my LIAFPN group, I had a mortgage broker. It was the first time he came to one of my events. He was introduced by some other attorney who brought him along. And he goes, I think, why would I use you as a mortgage broker and not some bank? And when we get back from the commercial break, I'm going to tell you exactly my answer and what his answer was and what the differentiating things are. You're listening to the Main Street Code for Financial Success. I can be reached at 631-647-4694 or themainstreetcode.com. This is Neil Himmelstein, and we'll be right back after the break. Thank you. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. If you need to reach out to me, 631-647-4694. We help you with all your financial needs, but we specialize in life insurance, annuities, disability, and long-term care. Before the break, we were talking about a think tank of financial planners that I formed called the LIAFPN. We have about 35 members, and we are expanding quite quickly. If you are a financial professional, if you are a CPA, an attorney, mortgage broker, or in the financial field at all, we welcome you to attend some of our educational meetings. And I like to think of it as a think tank, not a networking group. And it's not exclusive to one attorney, another attorney. We have multiple attorneys, multiple CPAs, multiple insurance people, multiple investment people. And it's amazing how the difference between one and another. And I had this conversation I was saying before the break with a mortgage broker the other night. Yeah, I said, what makes you different than anybody else? And it relates exactly to what I do. So he says, we work with a lot of small businesses, and a lot of times they're not showing a lot of income, but we know, we have sources of funding that we can show their business, the value of their business, because a lot of business people, quite candidly, dump their money back into the business or take out a small salary and do different things, which the mortgage banks, your typical bank, looks at and says, wow, he's not showing that much income. I can't justify this loan. So he can justify the loan using other methods because he gives that personal touch of justifying the loan. And I have to say, if you're buying a house or you're buying a business and you're buying something, just to go to a bank and go online and place that order, they may find something in your past that they don't like, and they may decline you, or they may, and that happened also. I heard from a bank this week at a meeting, and they were talking about credit fraud and all this stuff, and apparently somebody stole their credit card at one point, and that was on their credit report, and they were denied a bank loan from that bank because there was an unresolved or released debt. It was coded incorrectly as a released debt, not that it was paid off or anything, because there was a fraud. Not because they and themselves spent the money or had the problem, but all of a sudden there's a fraud. So if you order life insurance, and this is where it comes to, if you're doing a banking on your own, how do you fight that bank? You need an expert who can either A, take it to another bank, or B, negotiate with the bank, which is what I do when you buy an insurance policy through me. So if you buy an insurance policy online and they see something in your medical records, like, I'll give you a perfect example. Doc, my wife's complaining I snore a lot. Very common. The doctor writes down, you need to do a sleep study test to see if you have sleep apnea. If you stop breathing and this and that's very dangerous. So the guy says, well, it's not that big a deal and blah, blah, blah. And he never goes and takes a sleep study test. I get this all the freaking time. So the insurance company underwriter looks at it and said, well, he didn't follow up on his testing, so I'm not going to give him insurance until I know whether he has sleep apnea or not, because if it's not addressed, he could die in his sleep. So if you call online and buy insurance and they see that in a doctor's note and you never followed up, it may have been a casual note, but it's in those records. Guess what? You're not going to get insurance. Now you got to fight to get insurance. So I work with multiple companies, and when we do our discovery of your background and your medical history, we position it to the insurance carrier. Not only do we do that, but also if you have good habits, it makes a big deal to the insurance company. For instance, high blood pressure, diabetes, very popular, and with weight gain and age, very popular. If it's not tended to, you may get a rating from an insurance company or a declination. Now, what does that mean to get a rating? Well, basically it means they price your insurance by your health, by your risk. The insurance company is like a casino. Okay? They're assessing the risk. That's what they are. They're a casino. If they feel you're a good risk, they're going to give you a great policy. If they feel there's anything that could hedge that risk, okay, well, we're going to charge more money. So if you want to get the best price, you got to really understand the entire market, not just be a career guy selling one company's product, which may or may not be the best price, or may or may not have all the features that you want. They're trying to sell that one company, but you really need to use a broker who has access to every insurance company. And in particular, if you have an interesting medical background, you may not even realize you have a medical background. Like I said, you told the doctor I snored. I feel great. My blood pressure's fine. But you told the doctor you snored, and he said go to the sleep test, and you didn't go. Well, they'll count that against you. So these are the little things that happen. Now, the other night at my event, because I know all these people, I had an attorney. He's an estate attorney who a couple years ago needed a couple $1 million of insurance. And when I first met him, he'd gone for months within another company, and he's a raving fan. I'm going to have him on the radio because you can't make this stuff up. He went with a big company, some insurance guy he thought was great, and they were rating him because he had at birth, he had a little heart thing. I'm telling you, this guy does MMA. I mean, this guy's like, he's in tremendous shape. He takes care of him. He watch what he eats. And he watches what he eats. He does all that. And they saw something in his heart. So when we got his test back, I said in 8 days, I got him the lowest price, the best super preferred class for several $1 million. I save him at least $10,000 or $12,000 a year for the last 20 years. I mean, for the next 20 years, by getting him that kind of offer that he should have gotten initially. Somebody asked me a question the other day. Is there a way of finding out about your own medical history? And yes, there is. So nowadays, one of the things I suggest to clients, to people, anybody, including myself, which is what I do, is I always like to get a copy of my doctor's report. And the doctors today, a lot of them, and the hospitals, will put your things on a portal. You go for a heart test, you go for this, you have a patient portal. Ask your doctor if you have a patient portal. Is probably the easiest. And you can download the information on that portal. It may or may not have the doctor's notes. You really want to get the doctor's notes. When we do an insurance application, if there's something questionable, if they see something in your medical, they will order your doctor's notes. And in your doctor's notes, they will find out what's there. And occasionally, we'll find things out in your doctor's notes that you may have forgot about or didn't know about, and we'll find a way to address it. So what we do is if you have multiple what we call impairments, let's say high blood pressure and high cholesterol, that's 2 impairments. We address them individually. So I have one where the client got declined because he had chronic fatigue and he has sleep apnea and he's looking for disability insurance, and it said chronic fatigue. But when we went back and questioned the client, he had Epstein-Barr 3 years ago. It's done. He doesn't have chronic fatigue, but his records made him a declination. So we have to go back and address the doctor sometimes, or see when those notes were. And when we get a copy and we can work with somebody and with their doctor, now we get them a great offer. But just to accept a declination is not good if you want coverage for something. So these are the kind of things we do every day. We check the beneficiaries on your policy, the ownership, all these little things. That guy said, oh, you had $700,000. What type of insurance? Is it convertible? Is it permanent? That's what we do. You're listening to Main Street Code for Financial Success. Again, if you want to reach out to me, 631-647-4694, or visit me at themainstreetcode.com. Have a terrific weekend, everybody. Thank you.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its